Who wants to be a millionaire? Welcome back to week 5 of Levi's Guide to Building a $1 Million Portfolio. This week's task is to compare each of your accounts by the percentage of annual return on investment. Let's open up your percentage return on investment comparison spreadsheet that you completed last week. I want you to create a new sheet from the data so that you can analyze your past performance. We are taking the annual return on investment percentage column from each year and creating a year-over-year summary so that you can compare each account to see which ones have been performing better than others. If you like, you can download the updated spreadsheets, which I will include in the description below. Each account will be on its own line, and then each year should have its own column. Looking at each year, we see the total return on investment for the year in the row labeled All Accounts. I have also included the percentage annual return on investment for the 3 major American indexes so that you can visually compare your account to what the markets were doing that year. I'm going to pull up my personal chart to show you what it looks like when it's filled out so that we can start to look at how you can analyze this data. The first thing you will notice is that all of my investments are held at brokerage firms and not banks. By investing at brokerage firms, we get more informed advice and more investment choices, as brokerages focus only on supplying investments and not on providing day-to-day banking and lending, which is the primary focus of big banks. The next column will show you the type of accounts that I opened and in which order. When I started investing, I chose RRSPs, and when the value of each was significant, I started to look for other investment opportunities. Had I known about all of the benefits of TFSAs, I would have invested in them immediately when they were available in 2009. If I was just starting out now, the TFSA would be the first investment account that I would open. You will also notice that once you have multiple accounts open, the accounts which are generating returns higher than your annual average per year will be highlighted in green. This is to help visually indicate the high performance accounts and might help make decisions as to which accounts might need to be closed as they are not helping us enough. Looking at my World Financial Group RRSP, the mutual fund it was invested in was way too erratic. The fund showed huge returns some years and then massive losses in others. Because it didn't pay a dividend at a regular interval, it was an obvious choice to close and move that money to another account. Overall, when I sold it in 2014, it was actually worth less than it was when I purchased it 8 years earlier. You should also compare each account to market indexes. Remember to focus on making decisions that return the best out of each situation and never dwell on a negative. A negative return may still have been the better choice. Let's look at an example of that. My RRSP account at Odlum Brown lost 33.5% in 2008. Although I was down just over a third of my money, it was still better performing than the Dow, the S&P 500, and the NASDAQ that year. The real downside that year was my World Financial Group mutual fund. It lost more money than all 3 indexes and brought my annual overall rate down that year. A chart like this makes it very clear as to how your past investments were performing compared to each other and the overall markets. As I was prepping this video, I thought I might show you some other interesting advice that came up from my own personal accounts. If I show you the types of investments that I had within each of these accounts, you will see something truly interesting. I had 3 accounts invested in mutual funds and 3 accounts invested in dividend-paying equities. No shock here, but all my average annual rate on return investment in the mutual funds was significantly lower than on my stock accounts. One of my mutual funds actually lost an average 1.8% per year for 8 years straight while I held it. The only person making money was my broker at World Financial Group. This helps to demonstrate my distaste for mutual funds on an account value over $7,000. If you're interested in learning more about reducing fees and making more money, please check out my video on flat fees versus percentage fees. Hope you have a good time analyzing your past investment performance, and please remember that past performance is not an indication of future performance. Thanks for watching. Let's get rich together.